April 2021 update of the NAREIT Index of Real Estate REITs. And then we're also going to take a look at a shorter term point of view of an S&P index of real estate REITs. So we're using this as a proxy to kind of tell us how's the overall real estate market doing. And we're using our business cycle model. So good morning, it is April 12th, 2021, and this is an update as of March data for this NAREIT index. This is a critical point podcast update. So what we have is there was a minor super cycle bottom in around 1974. We got a bull market come into even a smaller minor super cycle bottom in 1990. And then came into a major super cycle low with the 2008-2009 financial crisis. We were on the verge of a depression, but we saved ourselves from it. And it came into a 72-year business cycle bottom. Now, in the future, I may call these super cycles something different, like this would be SC1, this would be SC2, this would be SC3. There's even an SC4 that goes out for a couple hundred years that may make a major impact in a decade or two here. At any rate, we can see how well that worked. Now, along the way, we had major long-term business cycles that normally relate to recessions. And we got another one when this index topped the latest allowed by the model. So a correct forecasted years in advance for a top of this index. It actually forecast years in advance for the virus recession, not the actual virus itself, but just for a recession about the time that we got the virus recession. And so we see we got this tremendous bear market, and we can see last year this index bottomed for this major long-term business cycle at the same or near the same time as the stock market. And we also believe the economy bottomed last year in terms of the recession, but we have not fully recovered as of yet. And there's still pockets of the economy that's actually still in recession status. At any rate, the forecast is that the 9-year business cycle or long-term LT3, or the major long-term business cycle, and for those of you who follow like economist Schumpeter's economic model, it's also called the juggler cycle. It's used in banking communities and economists and whatnot. So what it's suggesting is we should have a bull market until about 2027, meaning it could top a year earlier than the economy and stock market, but it may not top until as late as, let's see if I can bring that up, 2031. So that's actually right in line with what we're seeing for the overall economy and the stock market. Now that's a bit unusual. I personally believe the real estate market likes to top out well ahead of the economy and stock market. So we want to watch about mid-decade for some problems here for real estate. I'm also concerned that we're going to run into issues when some people have permanently lost their jobs. What's the lingering effect of all this moratorium on paying rent and being evicted and whatnot? There could be struggles for real estate. The question is it going to perform as well as the stock market and as well as the economy? Nevertheless, we are long-term bullish this decade for this REIT index. Remember, it's real estate investment trust, and these things this index tends to have a strong correlation to the stock market. So it may be picking up a little bit more in the stock market economy than what it should in terms of real estate, but we're using as a guide of what can go on in the real estate market. So I think it may take a while, but I think this index is going to record high because the super cycle trend is up from the great financial crisis, the great recession, and it may stay up all the way into 2040, 2050, but we do want to look out for something more severe at the end of this decade for the stock market and economy. Now, the economy grows for about 7 to 12 years, and then you have a recession 1 to 3 years. That is this 9-year cycle, or LT3, or major long-term or juggler cycle. But real estate doesn't have to march in line with that economic cycle. It can do its own thing, but it'll still follow that type of cycle, still have a similar definition, a similar duration of time, but on a calendar basis, it can be at a different time than the economy. So we will want to watch out for that. But for right at the moment, this looks constructive. It looks bullish. It looks like the model's right, and it looks like the market's moving higher. So this is this year's performance for this index. So they tried to push it higher, couldn't do it, respected the prior year's high, collapsed for the recession, came back, and is trying to come back some more, and it's looking positive in my opinion. So now what we're doing is flipping to the S&P's Standard & Poor Company's version of a real estate investment trust index. The symbol I'm using on my quote and chart system is FRI, as if it was abbreviated for Friday, okay? And what we can see is that, yes, the financial crisis came into 9-year business cycle, and there was a series of super cycles all the way up to the 72-year, and so it was the most important fluctuation since the Great Depression. And we correctly forecast the bull market for real estate, stock market, economy, but we also correctly forecast that it would drop into recession no later than 2021, and as it turned out, it bottomed in 2020, similar to the stock market, okay? Now, the index is trending higher as we would anticipate relative to that narrative index I just showed you. But what's going on a shorter term basis or intra-year basis, and we think there'll be a little hiccup coming here sometime, but this market could be tracking in line with the stock market very well, and I think the stock market is going higher into the summer months, has maybe a 3% or as much as 7% setback, and then trends higher into the end of the year. And I think there's a chance real estate can do this. Now, there is a little monkey wrench going into that could interfere with the gearing of this kind of thing and give us some complication. That is, the model prefers to call a minor long-term cycle top here, which means this was nothing more than intra-year trading, and the market should have done this. Should have gone higher into late this year, then down, meaning it's going to top this year for that 3-year cycle when the stock market should not top the next year for that 3-year cycle, suggesting maybe something can hit a headwind a little sooner in the real estate market. All right. So I wonder if people becoming a little too enthusiastic and there's going to be a little discouragement later this year into next. Don't know. We may learn that the model's making a mistake and we just moved the 3-year out to here to be in line with the stock market, and then this REIT index is going higher into next year. But I'm concerned that the REIT index is not going to stay up as well into next year as the stock market. And let's face it, most of the time for the average investor, the stock market's the place to be. It's the easier, more sustainable return. It's more liquid. You can get out of your money. But keep in mind, real estate is location, and if you're in the right area, okay, you could and make a much better return in the stock market, and you might find some decent liquidity where you can actually take that return. So the best I can tell you is I think we've got a few years at least, if not in the remainder of this decade, to go higher in real estate. Some positive things coming, but it may not perform as well as the stock market. And then on a near-term basis, say this year into next, I'm concerned that this particular index and perhaps the narrative are going to turn sluggish later this year and early next. They could top out ahead of the stock market. I don't think that's problematic at the moment. Again, I think it just suggests that just maybe this index won't perform as well as the stock market. Now, at the bottom of this chart, I just added a ratio of this REIT index divided by the S&P 500 stock index. And you can see for quite some time, it's been sluggish and lagged the stock market. At any rate, like I say, I've got to be bullish this decade for real estate. I'm optimistic for it. But again, if you're looking for big gains, it will depend on location. I'm not convinced there's going to be big gains out of, say, a national type investment, something that you invest in through the stock market into real estate. Nevertheless, it is in a bull market. Past performance is not necessarily indicative of future results, performances. So manage your risk relative to an analysis of others and your own. Have a great day, and that's your most recent update of what we expect for the real estate market relative to stock market, as well as relative to the overall economy, and more importantly, relative to the business cycles of real estate itself.